giant hydroelectric dam, built and financed by China to meet Abidjan's energy needs. One of many examples that illustrates Beijing's growing presence on the continent. China has overtaken the US nearly a decade ago to become Africa's largest trading partner, with bilateral trade reaching a record high of $220 billion in 2014. Over 10,000 Chinese companies operate across the continent. The vast majority are present in Nigeria, Ethiopia, Tanzania, Zambia, and South Africa. Millions of jobs created, new infrastructure, a transfer of new technologies. But at what price? China's expanding footprint is not without controversy. Critics are suspicious of what they see as a neo-colonial land grab, accusing China of exploiting the continent's resources. Despite slowing growth, China's huge economy still has huge energy needs, and 22% of China's petrol now comes from Africa. Only a third of Chinese companies are involved in manufacturing on the continent, meaning that many African states have run large deficits importing Chinese goods and exporting natural resources. China is also Africa's biggest lender, owning, for example, 70% of Cameroon's public debt. Some fear that the Asian giant is setting up potential debt traps, distributing money to countries who might not be able to pay it back. Despite the criticism, Chinese President Xi Jinping wants to expand Sino-African trade. The continent is now a part of Beijing's One Belt, One Road initiative, a cross-country infrastructure project that China says has already exceeded $5 trillion in trade with participating states. The Economist has rebaptized Xi's pet project, calling it the Our Bulldozers, Our Rules initiative.